Yeah, hi Trade. So we've just seen the Bank of Japan meeting drop. There's no doubt that this is dovish relative to expectations. Certain expectations had been ratcheted up. Certain banks have been calling for an end of YCC. Local publications had been saying that the Bank of Japan were looking at the negative consequences of their policies, and the market had built an expectation. And the Bank of Japan have effectively done nothing here. They haven't changed their target rate. The balance rate has stayed. There's been no changes to YCC whatsoever. In fact, if you have a look at what they've been saying around bond buying, it will continue in its bond buying operations in a flexible manner, and they'll be buying JGBs on a fixed rate every day. So I think anyone who's been shorting JGBs, and we know a lot of people had been doing so, they've been solely disappointed. If you have a look at 10-year swap rates on the back of what we've been seeing today, you can see them down about 9 basis points since the announcement had come through. So people have come out and moved those a bit lower. So that's where the dovish reaction's been seen. I think part of the reason was what we've been seeing as well is in their economic projections. They've taken GDP for this year down from 2% to 1.9%, but it's in the core inflation projections that I think you need to be looking at. They have ratcheted up for this year. Core is now at 2.1% from 1.8%. For the first time in a long time, the Bank of Japan are going to be meeting their inflation mandate if they hit those targets. That's their view. But what I think is interesting then is if you go into 2023, their inflation estimates are going to go to 1.8% and in 24 into 1.6%. So despite what's happening here, they are expecting inflation to drop down. I think that's given them scope to push back on market expectations, and obviously showing no signs of back down at all. Now, what have we been seeing across markets? Well, certainly the yen has underwhelmed. Given the levels of implied volatility, we were expecting something about 280 pips on the day. That still may play out, but it doesn't seem likely at this moment. But we are seeing dollar yen trade from 128.54 into really 131. Have we got a bit of scope to move higher? Perhaps, but I think the market has been pretty big sellers of calls around 132 for an expiry for tomorrow. So people are, that gamma position may need to be looked at. So they'll be have a vested interest to keep a lid on that move. But the yen has sold off, as you can see here, against all currencies. The Nikkei futures have had a really strong rally on the back of this. There's been good relief playing through, and that's resonated into buying into Asian equities as well. S&P futures have had a bit of a rally on the back of this one as well. The question is how Europe will trade this. This is dovish relative to expectations, and Kuroda's going to see out of his term with YCC firmly in place for now.